In this video we are going to talk about 10 reasons crypto could stay stable in 2022. So before starting this video, please like this video and subscribe to this channel for our future updates. The year 2021 was a watershed moment in the history of cryptocurrencies. But what will happen in the year 2022? Over the past year, we've seen Bitcoin reach many new all-time highs followed by precipitous losses, as well as increased institutional investment from major corporations. Ethereum, the second largest cryptocurrency by market capitalization, also reached a fresh all-time high late last year. Officials from the United States government, as well as the Biden administration, have voiced a growing interest in new cryptocurrency legislation. Meanwhile, interest in cryptocurrency has soared, becoming a popular issue not only among investors, but also in popular culture, owing to the efforts of everyone from longtime investors such as Elon Musk to that kid from your high school who is posting about crypto on Facebook. Number 10. Regulation of cryptocurrencies. Expect to hear more about Bitcoin legislation in the coming months. Officials in the United States have expressed a particular interest in stablecoin regulation. The United States Congress and legislators around the world are attempting to determine the best way to develop regulations and norms that would make cryptocurrencies more secure for investors and less alluring to cyber criminals. In the crypto sector, regulation is certainly one of the largest overhangs, says Jeffrey Wong, president of the Americas at Amber Group, a cryptocurrency financial firm based in Canada. Clear regulation would be much appreciated, says the group. Federal Reserve Chairman Jerome Powell recently stated that he has no intention of prohibiting cryptocurrency use in the United States, while Securities and Exchange Commission Chairman Gary Gensler has consistently expressed his views on both his own agencies and the Commodity Futures Trading Commission's role in policing the cryptocurrency industry. Number 9. Approval of a cryptocurrency ETF. On this front, there has already been a significant breakthrough, with the first Bitcoin ETF making its debut on the New York Stock Exchange in October of last year. The development represents a new and more conventional method of making cryptocurrency investments. The Bitcoin ETF enables investors to purchase cryptocurrency directly via standard investing brokerages with whom they may already have accounts, such as Fidelity or Vanguard, without the need to open a new account. Some, however, argue that the ETF is insufficient since, while the fund is tied to Bitcoin, it does not truly hold the cryptocurrency in its entirety. Instead of Bitcoin, the fund invests in Bitcoin futures contracts. While Bitcoin futures reflect the broad patterns of the actual cryptocurrency, analysts believe that the price of Bitcoin may not be tracked directly by the futures market. For the time being, investors must continue to wait for an ETF that invests solely in Bitcoin. The SEC has considered ETF clearance on a number of occasions over the previous few years, but BITO is the first ETF to receive approval from the regulator. Number 8. Broader institutional cryptocurrency adoption. In the year 2021, mainstream firms from a variety of industries expressed interest in cryptocurrencies and blockchain technology, and in some cases made direct investments. In the case of AMC, the company just revealed that it will be able to take Bitcoin payments before the end of the year. Fintech businesses such as PayPal and Square are also putting their money on cryptocurrency by allowing customers to purchase it through their platforms. Tesla continues to waver on whether or not it will accept Bitcoin payments, despite the fact that the firm owns billions in cryptocurrency holdings. Experts believe that this level of buy-in will continue to rise. Number 7. Volatility in the stock market. Bitcoin's volatility provides yet another reason for investors to stick with it for the long haul. If you're investing for long-term growth potential, you shouldn't be concerned with short-term fluctuations. The greatest thing you can do for your cryptocurrency investment is to set it and forget it, or to avoid looking at it at all. Whenever there is a price movement, whether it is up or down, as experts continue to warn, emotional reactions can force investors to act rashly and make judgments that end in a loss on their investment. Number 6. Global banks will launch more Bitcoin-related services. Despite the fact that the relationship between cryptocurrencies such as Bitcoin and centralized banks is not the greatest, the growing popularity of cryptocurrencies is leading to an increase in the number of central banks launching Bitcoin-related services by the year 2022. The decentralized character of cryptocurrencies is currently being considered by large banks, which are implementing projects and launching programs in response to customer demand. Number 5. Bitcoin prices will plummet, but will continue to rise. Bitcoin may not have demonstrated its full potential at the start of 2022, but it does not imply that it will continue to decline in value indefinitely after that point. Despite the fact that BTC's future development and performance are uncertain, market analysts remain optimistic. Even while volatility will always be a component of Bitcoin, as it will be in all other cryptocurrencies, the value of Bitcoin will continue to climb even after all of these variations. Number 4. More ownership opportunities will be created as a result of Bitcoin. It is one of the most unique options that Bitcoin or any other cryptocurrency may provide, in that it can offer a large number of different ownership opportunities. Because people are looking for new methods to invest in breakthrough technology and enterprises, BTC has the potential to lead to widespread ownership of cryptocurrencies. Because of the growing ownership, huge technology businesses are expected to invest in blockchain and cryptocurrencies. Number 3. Bitcoin is projected to reach $100,000 in the near future. However, despite the fact that this may not appear to be a reality at present time, analysts remain optimistic about Bitcoin's bright future in 2022. Bitcoin is regarded as the face of the cryptocurrency industry by a number of industry professionals. Bitcoin has already demonstrated its genuine potential in 2021, which is entirely appropriate. As a result, there are some quite bullish Bitcoin price predictions. Positive changes are taking place that will propel Bitcoin farther into the cultural zeitgeist, ideally resulting in an increase in the number of people who purchase it. The number of cryptocurrency users continues to grow year after year, according to data from CoinMarketCap. The mayors of New York City and Miami are both paid in Bitcoin, as is the governor of Florida. In the state of Arizona, a law has been introduced to make Bitcoin legal tender. The International Monetary Fund has recommended that El Salvador discontinue its Bitcoin experiment, while a representative from the European Securities and Markets Authority has stated that Europe should prohibit Bitcoin mining. I would argue for cautious optimism in this situation. While measures and indications are heading upwards, the price of Bitcoin could falter in the short term if it attracts the wrong kind of scrutiny from regulators. Number 2. Changes in the Bitcoin ETF on the spot market. This is a significant development. In 2022, cryptocurrency investors will be on the watch for the first Bitcoin exchange-traded fund to be launched by the United States. Futures ETFs are one of the most popular investments for investors, and it is possible that developments will occur in the spot Bitcoin ETF domain as well. Number 1. Fintech, disruptive technology and digital assets. It may seem like a self-evident issue, but it's one that deserves to be brought out. Digital platforms have had a profound impact on the way people interact with one another among customers, employees, employers, and traders, for example. Because of the digital revolution that has occurred over the past few decades, the cryptocurrency revolution about which so many people are talking would be impossible. The realm of fintech has had a disruptive impact on the financial services industry by integrating finance and technology and injecting cutting-edge technology into the traditional method of doing things. To begin with, cryptocurrency itself is a digital asset. That is, it is a digital record or representation of value that is recorded and monitored in an online public ledger known as the blockchain. And the benefits of blockchain are numerous, including enhanced dependability and trustworthiness, increased speed, lower prices, and decreased paperwork through tokenization, to name a few. There has been a noticeable spillover effect, with the emergence of fintech startups specializing in various aspects of the cryptocurrency ecosystem, ranging from wallets for storing digital assets to exchanges for swapping and trading them to companies such as Trality, which provide traders with the ability to create their own cryptocurrency trading bots. As the cryptocurrency ecosystem grows in size, so does the popularity of cryptocurrencies. Most importantly, popularity has even translated into financial success. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.